Welcome to today's morning report on Thursday the 11th of June with me, Rich Perry, market analyst at Handtech Markets. These European markets have opened pretty positively again, and this move higher in equities has been driven by the improved prospects of a deal for Greece in the last sort of 12 to 18 hours, meeting between Merkel and Tsipras and the key European leaders really coming together last night trying to thrash out a deal. No deal has been reached yet, but certainly that has given European equity markets certainly a boost. That drove them yesterday afternoon. Wall Street closed strongly higher, 1.2% on the S&P, and then Asian markets overnight as well. And the positivity has carried through into today's trading. DAX and CAC both up about 0.7%. I mean, mixed views really. I mean, you're still getting comments such as Jens Weidmann, for example, was saying that there needs to be a deal done quickly. Time's of the essence, otherwise the risk of default is increasing. But certainly at the moment, the markets are taking it fairly positively. Interesting that we're seeing continued volatility on these forex markets. What we've saw yesterday, the volatility in the German Bund. The German Bund fairly settled actually today, but what we are continued volatility in the forex markets. The dollar index continues to fly around sharply higher, bouncing back today, following on from significant weakness it saw yesterday, up strongly against all the forex majors. Cable and euro especially are weaker. Dollar yen's very much stronger, and the big mover is the Kiwi dollar, which has had a significant decline, 2.5% lower on the Kiwi dollar in the reaction to the RBNZ, the Reserve Bank of New Zealand, which cut interest rates by 25 basis points, and also suggested that there were further cuts potentially ahead, suggesting that the Kiwi is overvalued, and there was significant room for further downside adjustments. So the Kiwi has been under significant strain today. Interestingly enough, the Aussie dollar, which is my chart of the day, I'll speak about in a minute. Aussie had strong employment data here, and the Aussie dollar is one of the better performers against the dollar. That is of note. The main economic announcement we've got today, or pretty much only one we've got now after Chinese data out overnight, the industrial production, which in line with expectations really, with retail sales at this afternoon. Retail sales for the States is expected to come in at plus 0.7% on the adjusted ex-autos number, the core data. Actually be on a year-on-year basis, that would actually be the first pick up in the year-on-year data since October. And retail sales data has been incredibly disappointing actually in recent months, and that would be seen to be an improvement in the retail sales, and it will be interesting to see the reaction on the dollar today. Pretty strong, so that's at 1.30 this afternoon. Now, my chart of the day, which is the Aussie. This Aussie dollar is a very interesting one actually, because we've seen this selling phase just settle that we had in late May. And it's settled around the old key lows. If I just quickly zoom out there, you can see those old key lows, round about 75 and 75.50 with those old key lows. Now, what we've had since then is the potential small base pattern, because we see this sort of rally high that we saw yesterday. We saw yesterday a bullish outside day, or a bullish engulfing pattern on the candles. These momentum indicators as well. Stochastics beginning to rise strongly. MACD lines looking like they're about to cross over. RSI as well picking up as well. So it's interesting because what we've got now is this resistance. This old key floor of 78 figure became a resistance. Looking also at the RSI around 52, I think it was, the old sort of lows that we saw in early May. That's also now a level at which you'd say that that's where the resistance comes in. So you've got the resistance at 78, and also the arguable, in inverted commas, resistance RSI as well. So if you started to see the RSI picking up into the low to mid 50s, a signal that we're about to get some further traction to the upside. All that 78 figure resistance, that's on the hourly chart. You can see that here. It's basically acted as a pivot level all through, and again, pretty much to a certain extent peaked out the early June rally. 78.18 was that rally. But what we've seen since then, what we've seen since then is this sort of bouncing back off that 76 figure level, and we're now sort of trying to build again. We've seen that just zooming in again, the sort of overnight levels have been fairly positive because that was the unemployment data that we saw coming out, and just drifted back as the dollar strengthened today. But it certainly seems as though there's a pivot level near term around 77 mark, which has acted as a pivot level previously as well. So 77.10, around about there's a bit of a pivot level, so you need to watch out for that. And certainly if you start to see the Aussie finding support and pushing higher again above that 77.10 level, that I would think would be certainly a suggestion that the outlook is still improving, and it could see that ultimately a test of that key resistance at 78.18. It's obviously not happened yet. It's just sort of a pattern that could be developing, and the fact that you're sort of trading above the hourly moving averages as well, which is positive. Momentum indicators on the hourly chart reasonably positive, nothing too outrageous, just showing general improvement, too strongly bullish, but certainly holding above that 77.10 mark would be a signal of I think intent to this, because it is a pivot level on this chart. 77.10 area to 77.20 seems to be a pivot level, so holding above that would be a positive sign, I think, for the Aussie. Now the key support for this phase, this bull recovery over the past few days, is that 76.34 mark, and then obviously underneath that you got that 76 figure support as well. So the Aussie is improving and outperforming the other majors anyway, certainly today, apart from obviously the dollar, but it is performing pretty well considering the Kiwi is under such significant strain today. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.